Well, it's my favorite time of the month where we get monthly charts, but there's some basic things we should be going over. First, we obviously had this massive reversal on Friday, and we all know why. President Trump put 25% tariffs on Canada and Mexico and is making a big splash about it. We knew this was coming, but a lot of people thought it was some kind of tactic, which I still believe it is, and we'll dive into that. But not to be left out, for good measure, a little bit after that comment, he said we're going to do it for China too, which of course he has done. Now, add that chaos and what it actually means to the fact that we also had the broad AI basket from Goldman going down and having the worst performance ever since the pandemic, and you have a pretty picture of what's going on. Some might call it a suck salad. So let's get to it. The most important thing for me in seeing what happened was not only the reversal, but we really just did the gap fill, and now we're going to figure out what we're going to be when we grow up. When we drill into this on a smaller time frame, we're going to see a lot in here, and obviously look at where all these bodies are. They're going bigger and bigger. The wicks are not coming to the downside. It's pretty clear that they are buying certain sectors. We're going to get into what those sectors are. I do think it's very important to point some things out here. As we enter any new administration, whether it's the past administration or this one, there are always things that happen, and it's just the way that it is. You have the first 100 days where you see a lot of volatility, and this is no different. We had rumors that really weren't rumors. They were actually posted on Reuters that this was going to be a delay, and that all of a sudden we were going to have till March 15th or March 1st for these to implement as you work through it. And then you can see the bounce, or where we drop, and then the bounce, and then the news comes out like, no, there's nothing you can do it. We're starting on Saturday. This is the way it is. Interesting tactic. Nonetheless, here it is, and this is what we're looking at. So understand that we can look at technical analysis, but if you're not looking at the stool and you're not looking at the macro fundamental and technical picture, you're just setting yourself up here. Now, whether you take advantage of this or don't take advantage of this are two different things. If I take advantage, I mean actually look at what's happening. So what I'd like to do is just take a break after the end of every day and just say, okay, well, what actually happened? And not just, oh boy, we got crushed if you didn't sell, but the news hits, and then we have retail that panics. And then I just think it's very important to point out before I go any further and start looking at this from 34,000 feet, just understand that right here, what did you have from the last hour of the trading day? Did the market ever make a new low, really, from the last hour of the trading day? The answer is no. So from the last hour on, you had institutions, which we know they buy at the last hour. We had institutions buy as we knew who's selling, retail. Okay, this is why we always look at that data where it shows the last hour and the beginning of the trades, right? And because we know that's retail, and we know the last hour is what? We know that that's institutions. Did they sell? No, they didn't. How did the end of the day go? Well, we're going to get to that, but I think there's some more important things we need to do first. Now, the beauty of monthly charts is it just gives us a sense in saying, okay, if we got rid of all the noise, what's happening? And what I would point out here is just very simply, we're just looking at a 9 EMA here just to give us a guide. We could overlay a bunch of them in here and you're going to get a different outlook. And there's probably one that I should really point out just to kind of take a look at. Actually, I'm going to do it. We're going to do it. All right, so you have this doji sitting right in here. Dojis are what? They're signs of uncertainty. Does it tell you anything? I actually think this tells you a lot. And I'll tell you where it's what it's telling me, because you asked. So if you see on this August 24 and how we rip down and then you form hammer time, these are liquidity grabs. And then you see another one. So if we really just study what happened here over the month, and we look at just the simplest of things and say, okay, did we get back down to that open and undercut? And the answer is you did. And so you really came down here, saw what you could grab, and then you went higher. And that's all from that November level. So when you look at it from that standpoint, I don't really think that anything tragic happened on the month. I think it was hard for people to trade because they're in the same mentality that, oh, I just need to be trading the same names. The disparity between the Magnificent Seven and the rest of the market is extreme. And it's why that if I look at our community and where the majority of money is being made, it's really in a lot of the low beta names. And I'll show you what I mean by this a little later in this video. But what I think is very important is just understand you have a doji. I mean, it's real simple where your levels are, 58, 13, 25, and then you're at 61, 70. Until it does that, you're in a trading range from the November bar. And I wouldn't think of it in any different way. Now, are you going to get news events that are going to shake the market? You are. But I want to be very clear about something and just give you my opinion of this. you already have the event. So we're not going to get super tariffs. So he came out, ripped the Band-Aid off and said, we're going to do tariffs. And then the market went down. And then by 3 o'clock, you had net buyers in the market. Now, does that last? Or does everyone come out and retaliate? If you understood economics and you understand that we're trading, take Canada, for example, and I'll say we because I'm in the US, you're trading at, I think the deficit's $64 billion in difference. Hold on. I'll just do it this way because it's much simpler. But here's the Canada-US trade deficit. And if you get into this, what you'll see, here it is with Trump in the first term, and then here it is with Biden. And then you can just see that we explode. Now, why do we explode? There's a couple reasons for it. I'm not going to get into it because I don't want to turn this into some kind of Politico thing. But understand that people could also argue that it was the pandemic. Yes and no is quite frankly the answer. But what happens here is when you have a trade deficit like this, what he's trying to do, the new administration, is override what the past administration did and welcome to U.S. politics because that's what they do back and forth. And then they just shake the jar and no, I'm a red ant, no, I'm a blue ant. And then they just shake the jar. All right, get it? Good. Now we got the politics out of the way. The bottom line is when you have a deficit like that, they try to fix them. Tariffs is one way to fix them. So what they're trying to do is find a way to fix that deficit, which is at one of the biggest levels that it's been in decades. That said, is this going to have an effect on the market? My personal opinion is it could on the apparel side, and we're going to get into that in a little bit. But I want you to understand something. Tariffs hit on Friday, on an option day. This is the market, and that's the close that you got, which is an all-time high monthly close on the NASDAQ. And it's a doji, and this could have been nasty. This could have been like Janet Jackson nasty, and it was not. And this is the hand that you're dealt. So we can talk about the hand that we should have had, but it doesn't matter. This is the hand that you're dealt. You have a doji right here. You have this kind of gravestone. You undercut that gravestone, and that could have been nasty. Janet Jackson nasty, just to be clear. And it was not. And if you overlay some of the simplest things here on a monthly chart, it's not like you're not overbought on a monthly chart. Like these usually don't end well. There's usually some kind of pullback, and we're not seeing it. And I think the understatement here is, what are tariffs really going to do? Is that going to drive domestic crude up? And then you start looking at things like this, and we're going to get a little deeper into this, but I want to just stick on the theme for a minute so that people can get this. This is crude, and this is what you see happening with crude. Does it really look like it's running away? Not really. Now you're getting this little uptick on the monthly, but is it really like running away? Not particularly. So if we go and say, okay, well, what did crude do during the week when all this happened? Well, it ticked up. Well, why did it tick up? Because of tariffs. And we all know the game. So in other words, what's going to happen? The U.S. is going to do tariffs. Canada is going to do tariffs. They're all going to save face. Then they're going to come to some agreement, and the deficit's going to go down, and everyone's going to claim victory. All right, that's just the way it is, and that's what we're dealing with. In regards to anything else that's here, I think that, I just want to leave this out there for us to understand. You're putting tariffs because of a deficit that's out there. So you have to understand the reason and the rationale for doing it, even though he said some of it had to do with illicit products coming over the line. This is important from a macro standpoint. He made it very clear that there's not much that people are going to be able to do about this. So the idea that it's going to go away, it's not going to go away. Is that going to drive the price of crude up? Is that going to drive the price of gas up? I do not think it will. That's my personal opinion. I think that these moves that happen, they're going to correct themselves a lot faster than people think they are. That's my opinion. But when I look at this on a monthly basis, I want to be really clear about this. When I look at this on a monthly basis and you come out of the pandemic, right, and then you get into change of administration, and then you see how this plays out, and then we come down, and then everyone will say, well, it wasn't that administration, it would have happened no matter what. There is an argument for that because of the, trillions of dollars printed. Remember, we were all buying NFTs and thinking they weren't JPEGs. So yeah, there is stuff here when you look at gas and where it was, when you're back to those 213, 212 levels. I do think that this winds up coming down based upon some of the other things that will happen here. And it's very important to understand just the core concepts of economics, right? And I get that people are like, well, tariffs are bad. We had tariffs before we had federal income tax, people. Just understand that in the US. So when you look at all this, you're going to have to give it a grain of salt, and you're going to have to look at this and say to yourself, when you look at the monthly, and this is where I'm going with this, and everyone panicking about the tariffs, is, okay, he's done it, now what? So it's kind of like rip the Band-Aid off. Here it is. Now what are you going to do? What are you going to do about it? And then how is it going to affect the economy? And now we're going to figure it out. And I think it's more important for us to watch what happens and read the data than listen to the pundits. And this is where we can really profit. I'll give you an example of what I mean by this. So if we take a look at something like the dollar and how the dollar has been acting, you'll see the dollar tending to break out into here, and then look at the monthly data on the dollar and then watch what it does, okay? And then watch how the dollar continues to break out, and then watch how the dollar acts in regards to movement in here. So do we really see something that is stabilizing? Yeah, you kind of do. And I think that's important. And people say, well, I don't know that it's stabilized since the October, November. That's fair. But if you went and took a look at from December 18th, where we had the last Fed meeting, and you looked at that bar, and I think that this is more telling than anything else. This is the FOMC meeting. And after the FOMC meeting, what happened? We went up, and then we went up a little more, and now we're back to the last FOMC meeting. All right, so is it really the policy that's affecting this, or is it the FOMC and what it's doing with rates that's affecting this, right? And they're connected. There's an interconnectivity, but we're not going to bore everybody with. But when you look at this, I think that that's really important to put in line. So then when you start overlaying this and going, well, how do I profit from this? And we're going to get into that. But I think it's really important to look at things like Caterpillar, John Deere, and understand that earnings are driving these names more than anything else. And certain names are going to do really well. Okay, and other names are not, right? But the dollar is going to drive industrials, and these tariffs can affect the dollar. So there is an interconnectivity there, but it's also the FOMC. Now, the beauty of the FOMC, before we really start deep diving into everything that happened, is this. The FOMC is basically a non-event at this point, and that's very important to understand. His speeches are his speeches. We didn't see this huge move on Thursday because of what Itchy said. A matter of fact, you've been in the same monthly range now since when? November. So everyone here panicked because tariffs are coming and everything's going to be awful. And then you look at where you're at and you're going, oh, wait a minute, we're in the same area that we've been. So when you start looking at this stuff, that's where I think the metal meets the road, and understanding that, yep, it happened. We ripped the Band-Aid off. Now what are you going to do? That's what you should take from this. It doesn't mean that it doesn't create volatility. You're going to have a lot of it. You're going to get a lot of headlines, okay? And he doesn't care. As a matter of fact, I actually think he wants the headlines and wants the attention. And I'm not going to go down that road because I want to get off the beaten path of this, of, a political conversation. But I want you guys to understand that if you're not paying attention to this, you're not going to get some of these movements. Understand that the initial knee-jerk reaction of oil's going to go higher is already pretty much in the bag. That, yeah, we're not feeling that way anymore. When you really look at crude, does it really look like they didn't know this was coming? Did it really rip on this because of the sheer panic of what's going on? And what is the number one export coming out of Canada into the U.S.? All right, where I think that this is going to get super interesting, and we'll get into it, is how does it affect the names like Tesla? And we're going to talk about this and how to trade these names. How does it affect Apple and their part, okay, and what's going on there? That's where I think this gets super interesting when you start to think of it from that perspective. Like, is there going to be a tariff on Apple because the components are made somewhere else when that comes into the U.S.? Are there going to be carve-outs? What do those carve-outs look like? This is when the macro becomes micro, and you can make a lot of money if you understand this. For example, I'll give you one, and we're going to deep dive into this in a little bit here. But one of the ways that I look at this is, do you really think that he's going to go after Elon's business? So when we see stuff like this, where we start seeing it come down, right? Do we really truly think that that's where this is going? Like he's going to say, oh yeah, I'm going to make sure that electronic vehicles or electric vehicles and everything that comes through, yeah, we're going to put a huge tariff on that. Or is China going to put a huge tariff on Tesla? Is that going to happen? Just to be clear, just so we all understand this, in regards to Apple, China's already put a tariff on them, and people don't even know this. Now, Apple rival, and I'm not going to butcher their name, get boost. China throws out subsidies. These subsidies, just so we're clear, they just started. They literally just started in January, and it's 15%, meaning buy a product that's made in China, that's Chinese, 15%. So Apple is already in trouble. So this is a tariff. Whether you think it's a tariff because it's coming in from outside or not, they're calling it a subsidy. You can call a banana a blueberry. It's still a banana. Right? Either way, what they're doing is they're stimulating their economy from their products. So this was a clip from the BBC, and I just think it's important. Trump tariffs hit China hard before. This time it's ready. Yeah, it's ready. It's already doing it to the U.S. It's already taking products that are U.S. companies and assigning, quote, subsidies to them. So yes, it's already doing that. It's been doing this in the EV market for some time. It's one of the reasons why Europe is getting crushed in the EV market. And it's another reason why we're going to talk about Europe in a second here, because I think that this is really something that everybody's missing this, and we're going to get into it, but stay with me. For Western markets are increasingly wary of Beijing's ambitions and trade's powerful bargaining chip, sluggish Chinese economy, yada, yada, yada. Trump returned. Company promises include crushing tariffs against Chinese-made goods, threatening 10% levy. Are you not going to buy something because it's 10% more money? I don't think that that's going to happen, right? I don't think all of a sudden people are going to change how they're doing this. And I think that people, when they really look at this, should look at what they've already been doing in the U.S. Where this comes into a problem is corporate profit, not consumerism. And I think that that would drive more innovation into the U.S., which then is going to create more jobs, et cetera, and it will feed upon itself, but only on the high end. The low end, you're not going to start buying your, wherever they make those sparkle paper towels from, people are going to stop buying them because they're $1 more. He has also ordered a review of U.S.-China trade, which buys Beijing time. Negotiating team for now, harsher rhetoric, and it will be this. I am sure at the time of recording this that Canada's already saying we're going to put more tariffs on you, and Mexico, she's down there screaming and saying we're going to do it too. Maybe they are going to say that. The problem that Mexico will run into is that you can move a plant pretty darn easy from out of Mexico and into Texas. And then you can also, turn them on and off, right? Very simple. Canada is very different because it's a very different product exchange that's there. So they have their own issues. But there's an area that I think that we might want to look at, but let's get to something else first. Now, in front of you is a list of ETFs that are world ETFs. And I just want to point something out. So if we look at EWQ here and we go to a weekly chart, and you're a little chopped up here, but if we were to look at this, we could see that we've already been hitting highs in May, came back down in June, tried to rally, get back through that level, and completely matumboed. It did not work. But there's a couple things to take from this. If we do the simplest of things and just overlay something like there it is, and we just overlay moving averages on a weekly basis, you can see how you're really truly acting here. And you're holding in here. There's no tariffs on France, right? So Louis Vuitton. So when you start to really think about this, right? So Louis Vuitton, there's no tariffs. Not that everyone's wants to go out there and buy Louis Vuitton because it's an $800 stock. There's a cheaper one too. But then you go and look and go, all right, what about Hermes? Oh, you're breaking out at all-time highs. All right, so what is everybody leaving alone? And I'm not just saying the US, but hopefully you follow where I'm going with this. See, it's very simple, and I'm not going to get a tinfoil hat on you, but I want you to understand this and think about it differently. They're trying to get your attention one way. You're focused on Mexico. You're focused on what's going to do to Canada. You're focused on what's going to do to the US. No one's paying attention to what's going to happen to France or Germany because of this, or Spain because of this, right? So what happened was we all focused on Canada. We all focused where they wanted us to focus, right? It's no different than shaking the jar of ants. They're going to fight with each other and not look outside the jar, right? You could see this throughout history. So what you always want to do is go, where don't they want my attention? And then take a step back. And another way of doing this without sounding like tinfoil hattish is to simply say, who benefits the most from this? Meaning, who's not even playing the game? Right? So sometimes the people that aren't getting swept up in these, I don't know another word for it, but pendulums, that you want to focus on that, right? So, okay. So where are we going with this? Well, when we were doing the pre-market live, one of the guys in the room keeps talking about Germany, and they're public, and you should definitely attend those or watch those. They start anywhere between 8 to 8:30. I shoot for 8:15, but there's a lot of really great ideas that are out there that are not my ideas, and that's what we do. We take questions from the audience. It's very different than how most people sit there and pontificate like they know everything when they do these pre-market lives. I don't know everything, and hopefully you'll understand that the purpose of all these videos is to just provide information, education on a macro and micro level. I am bringing back running through trades on these videos, by the way, guys, because and I'm going to run through one today, and we still have to go over the breadth. We have a lot to go over in this video. I just really want to hammer this point home because I see a lot of people that are panicking over this and not truly understanding it. When you look at something like Germany, and we keep hearing, oh, Germany's in a lot of trouble and they're going to have a real problem. Are they? Are they really? And I think that we get swept up in these bubbles, and as I refer to them as a pendulum, but at the end of the day, what's going on here with the market? I mean, it looks like you're getting ready to break out to me, right? We came back down, we tested those levels in 22, just like before, just like we did in our markets in the US, and it looks like it's going to push. Anyone talking about tariffs in Germany? Are we talking about tariffs in India? Is anybody talking about India and tariffs? You know, I don't see that kind of rhetoric right now, and you can see how we lifted on India, and we're trying to hold that level, and they have the most amount of people in the world, and they're growing the fastest. I think they're growing the fastest. I don't think they're the most amount. I think it's still China. Correct me if I'm wrong in that, in the comments. But here's my point. Where did Apple say that they were going? Did they say they're going to branch out into China, or did they say they're going to branch out into India? And this is really important to get, because when you start to look at this stuff, you're going, oh, okay, I get it, right? I should be focused not only on where they want my attention, but where they don't want my attention. And there's another way of doing this is to think about it. Like everyone says, Pelosi. Oh, she's the traitor. I can't believe how bad she is. No one even knows who Debbie Schultz is or David Ruse are when you start talking about insider trading. But if you go and take a look at data, and we talk about the Congress and the trading, they're killing Pelosi on the trading. Not that any of this should be happening. It's absolute insanity that these guys get to sit on committees and do this. I'm not going down that road. But where are they keeping your focus? They're keeping your focus here. And this is what's really going on up here. Okay? That's the point that I'm getting at. Watch where they're trying to get your focus, or watch where your focus is going. I think this is actually unusual whales. I should give them credit for it. This is why I always have that saying, cull your feed. Watch what videos you're watching. Watch who you're paying attention to on Twitter. I had someone that I was actually coaching with the other day, and it was interesting because they're sickly brilliant, and their comment was, oh, I did XYZ on my NVDA trade because of, someone said that this was going to happen. And my exact comment was, who is that person? Where'd they get that data? And the answer is, I don't know. It happens to the best of us. Right? And you just need to be very cognizant of it. So I would say, instead of going out there and saying, oh, we need to short, Mexico. Well, we already know this is going to happen. If you want my personal opinion on it, it's the exact opposite of what you should do. You should probably go out there and buy Mexico at some point. Now, this still looks like a bunch of monkeys floating down the river with a bunch of raccoons on a dumpster fire, but it is what it is. And I don't know that you want to go there yet. Let's take a look at this, see if there's anything here that's even worth paying attention to yet. Not particularly, is there? I mean, you're breaking down here on the 4 hour, but do you really want to rush into this yet? I don't see it. I don't see it yet. And it might be even something where you want to start looking at, what happens in Canada after they're washed out. But for now, I would look at what they're trying to take your eye off of instead of where your eye is going. Because to me, when I see names like Hermes doing what it's doing and breaking out, people don't even understand why it's happening. You can start going through this list, and what I would do if you're like, okay, what am I supposed to do with what you're saying? And people seem somewhat confused by when I go on these rants where I'm trying to lead you. I'm trying to get you to think. That's the whole purpose of me doing these videos. I'm not here to just expunge, this is going to happen, that's going to happen, because nobody knows. You can only trade what's actually happening. But when you start to see some of these apparel companies that they're not mentioning, maybe their goods are, while they are high end and they are expensive, maybe it's going to be an issue here you might want to start paying attention to. Maybe there's names like this out there that you might want to start looking at. And I think that's where this is going. And that's what I want you to take from this. I want you to think differently. Not only look at where they want you to go, but look at where they're not even paying attention to. because that's usually where the money's going to be made, quite frankly. And if I had to pick one sector, if you want me to pick one sector that could get absolutely crushed on this, it's definitely retail, because their cost of goods will go up. All these retail names that have rallied and done exceptionally well, I would go and look at where they manufacture their goods, because to me, that's where they could run into a problem. The Ralph Lauren's of the world. I'm actually long Lulu at the time of recording this. And I am looking at that wondering, do I really want to go through this and what's about to happen? Because I don't know that they're going to reverse this stuff in a day. And it could go a quarter, and it is going to affect gross margins. Just deal with the facts. No matter how you do this, gross margins will be affected by this. And it is an issue. Just an FYI, like TPR, I love the name. Are they going to do a carve out for handbags? Probably not, right? So just start thinking about it that way. And that's why I'm saying when you start thinking about Hermes and Louis Vuitton, think about where the puck is going, and also think about where they're not trying to get you to look. I need to get into breadth and go through this, but I could spend so much more time on this. If you want me to get specific about companies and which ones you should look at, let me know. As you guys know, 27% of the people that watch these videos don't even subscribe, which is mind-blowing to me. So subscribe to the channel, click all notifications. And if you want that, I can go through it and who's got the most exposure to these tariffs. I can do it during the weekday. Just comment in the video. Now, before I get into the specificity of breadth, I have an indicator that I use, and this one's set up a little bit easier for people to understand. So I'm going to use theirs. And this is just, it states right here, panic breadth composite. And I don't really want to refer to it as that, but it's theirs, so we're going to call it what they call it. What I want you to take from this is just the following. I just want you to understand that what they're doing is they're measuring a bunch of breadth indicators, and then they're telling you when they're peaking. There's two things I want you to take from this before we go further into what I'm going to explain, because this is a little bit longer term what they're doing here. And I do think it's important to understand your time frames when you're looking at data like this. So if we look at when you're hitting a low and the panic is not the same. So we made a new low here, but the panic of the breadth was not the same. And you can see that here. Well, let's change the color of that to something a little more brighter and differentiating that you could see. So you can see your little lower low here. And why is this important? You can see it here as well. And then that puts a bottom in as well. You can go through them and see them over and over again. You don't have a lower low here, but you're hitting a low there. What do you have here? The same exact thing from where you were at. And I think this is really important to get, that when you're selling down like this and that the breadth is not changing. In other words, you came down and the breadth actually got better, meaning you didn't panic. Now, there's two ways to look at this data. And the one thing that I want you to take away is longer term, it is very clear that you have the same divergence style that you had in here and that you had in here, that both gave you a bottom here and a bottom there. And what we keep hearing here is that this can't possibly be a bottom because of all the data that's coming out and the change in administration and tariffs and everything else. And I'm not saying that it's that cut and dry. The other thing that you need to take into account when looking at data is what you're measuring, the SPY. To me, if you take a look at the NASDAQ relative to the SPY and you start looking at where tech is, it's extremely, disparity is extreme to where we are. And I'm going to show you that in a second before we get into the minute breadth. But the other thing I want you to take away from is this is telling you very clearly that you're making lows and you're not panicking in the same way as you were. And that has clearly been areas of interest where you have had bottoms in the market. And this is not the only indicator that I'm getting that you're bottoming here on a breadth cycle. And I think that's very important to get. Now, the other thing that I want to state from a longer term perspective is this. You see where you're at down here? These are not extreme readings. This was not an extreme panic. So if you wanted to see an extreme panic spot, you have to realize that you're over something like, let's call it this 40 level, and that's how they measure it out. What they do is they take a composite of all the breadth indicators. I have their actual equation. I'm not going to share it because I believe they feel it's proprietary. So I'm going to just respect that. But if you just look at these levels and say this is where we bottomed, anything over this 50 or in this 40-50 area, that's where we bottomed. You're not there where you're saying you're going to put a bottom in. And I think that's important, meaning this could get wild if, all of a sudden he starts doing crazy things and, the first hit of crack is free, as they say, meaning if he starts really doubling or tripling and going, oh, well, now we're going to do 50% tariffs. Like if it started getting goofy, yeah, you're going to have a problem. For now, what I want you to understand when you look at this is you have a divergence here where people are like, oh my gosh, everybody's panicking, we need to get out. Yeah, no, they're not. They're not panicking. Matter of fact, you have a divergence that told you in September 23 that you were bottoming and you ripped from there. And then if you went and looked here as well. Now you want to see something, we'll go off on one tangent because this is really, just remember September 22, September, October 23. We all know that this was more around that. You need this date. So it was more around that October level. And quite frankly, so is this one. So here, just take a look at this. If you take a look at financials during the same exact time, and you said, oh, well, what happened in October 22 to financials? Well, that's aggressive, isn't it? Let's change that up right now. That's too much. So if you take a look at that area right here, what happened? Well, we went higher on financials, okay? And then we had the little pullback, and then what happened around October 23 as well? Well, financials. Well, what's happening now? And this is just important for people to get. You're in the same kind of situation here that you were there on that panic buy area. And again, we're looking at the SPY. So when I look at this stuff, it leads me to believe that there is some kind of bottoming process going on in the S&P. And maybe that's different than the NASDAQ. You will remember that we have looked at this for months and months, and I do think it's really important to get. If you look at the NASDAQ relative to the S&P, and I look at this a lot, what I tend to do with it is I tend to just overlay a 55 with it to get a sense of what's going on. And you can see that it's actually starting to flip back in favor of tech. I use the 55. You should use what you're comfortable with. But I'm going to make this yellow so that you can really see it and really make it very bright, obviously. And you see you flip this on Friday. And I think that's important, but we can get into the micro details during the week. If I was to look at this and say, okay, well, what's been going on? Well, if you really look at this, what you really have been doing is going nowhere in regards to the NASDAQ versus the SPY since about July 23. Every time you flip, you're coming back down. You're not getting this kind of momentum movement where you need to be in tech. This is really important to get. People say, well, why is that important? Because everybody is chasing these names where they could just be looking at the most simplest of names that are outperforming. See, when you understand like the macro and how that's playing out, and then you understand the fundamental and then the correlation to what's going on in the market, you'll stop just looking at tech. And you'll understand that like, oh, okay, we're starting to rotate again. That kind of thinking is what got us in Lulu at like 286. We saw something in here, bought it, and since then we've just been rocking and roll with it. But it's also allowed us to look for pullbacks and get into other names. I'll give you a more recent example. We bought SFM on the pullback. Now, as everyone's talking about tariffs and everything else on the 28th, and when I'm live trading, John will just type out what I'm doing because I can't type, trade, talk at the same time. But I saw this in the morning on the 28th, and we saw the movement. It doesn't matter why right now. But what we're doing is we're buying just Sprouts Farmers. Like it's just a simple little company that does exceptionally well. And we're up about $8-9 in the trade already. And this has nothing to do with tariffs, or it has nothing to do with what's going on in the world. And this is really important to understand, because it allows you to go out there and start looking for new ideas. You know, people don't even think about the fact that like Citigroup's still trading under book value. They're too busy trading all the tech and knocking that around. They're not even understanding why Hood's running the way that it is, or why Goldman's hitting all-time highs. They're not even thinking about that kind of stuff. They're too busy focused on the Microsofts and the Meta. And I would just say that when you have a market like this, where you have the Qs and the SPYs, and you have this relative performance where it doesn't really matter, you have to look at it and say to yourself, okay, well, since July of 23, we've been really just going sideways. Maybe you're up 4%, but is it worth the risk? I pointed this out the other day, and I hope people got it about 2 weeks ago. And what I was saying is the stocks versus financials. Like everyone's tracing semis. And if you really look at this, you're back to like 23 levels. I think you're somewhere in here, right? You're back to like 23 levels. From 2 years, you've gone nowhere in relative performance in semiconductors versus financials. So instead of chasing semiconductors and taking all that high beta risk, you could be buying financials and getting the same unit return on your risk. Think about that. Like you're getting the same unit return on the risk. So like, why would you ever take that amount of risk? It doesn't make any sense. You would just go and say, oh, I'll just buy financials because the risk of owning semiconductors, is going to be way more volatile than buying financials. Went off on a tangent there. Let's get back to the breadth. Now, when we look at the breadth of the market, we're going to note a couple things. The 200, the 55, the 50, the 200, the 50, the 20, and the 5. And you're going to see already that, are you starting to roll? And the answer is, yeah, you are a little bit. You've had a nice move up, and now you're kind of leveling off, and the breath is getting a little worse. Well, when you get up to a 90 on the 20, you really don't have a choice there. And I think that's very important to understand. Like, you can only go so far. When you start getting up in the 90s, you're going to pull back. But what we don't really want to do is we don't want the 50 to get below 50. And we don't really want to see this start to turn down. Now, the one thing I like about what we're seeing here, and what I think is important for us to get, is that you're in a position where the 5 is rolling. So as the 5 comes down, as this goes, it means that that's what you're going to bounce. So just to kind of follow along on what I'm saying, if you took this little block that just recently happened and you circle that out versus what you're seeing, you'll see that the breath is getting worse. And that shouldn't be a shock because of what you're seeing happen in the market. But why this matters is the following. It matters because if the 5 was like staying up here and we were down in these levels, you could see that you're going to have some kind of issue, right? So, and I'll show you what I mean by that. So if you take this area right here where you rallied and then you were down, and you can all see that rally right here, which is really what I'm focused on, but how these things are down in here below their 50 lines, then you're setting yourself up for underperformance. You're not doing that here. You're above all these levels. So as long as you're above those levels, you're in much better shape. And it's not just this time, it's any time. For example, if you're below these lines, like if I took a 50 and just dropped a level straight across from that 50, and it's going to make my life super easy here on that right here. And then I just said, okay, so when we spike up on the 5, and then the rest is rolling down, and you can see it right in here, how that's going to play out, right? Once you do that, you know. And so there's a differentiation when you're looking at the breadth, and this is why it's important, because all of a sudden these 5 spikes, as the deterioration is below key levels, is way more significant. That's not what's going on here yet, and I think that's really important to point out. And I think it's really important for us to understand what we have to watch. So what would you have to watch this week? And anybody can pull these up on TradingView. These are the symbols. I do have one that is like a holistic approach, very similar to that panic one I showed. I'm going to try to put that into here and share it some way. I'll figure it out. You don't want to be under 50. I don't really care if the 5 drops. I like better when the 5 drops, quite frankly, and I'm over 50. So if you look at these levels where here you are over 50, and then the 5's down here, when that reverses, right, and you get those pops, it's significant. And you can see that. Like they're the moves that you want. You're not going to get these huge pops when 90% of all the names are above their 5-day moving average. And you can kind of see where I'm going with this. It's just not going to happen. It's going to fade. It has to reset. And right now we're doing a ton of rotation because of DeepSeek and everything else. And I'm not going to bore everybody with too much of that, but there are some names we have to get into. What I would say is based upon a couple factors. The breadth of the market and how you're a little ahead of yourself here would be an easy way to say it. The rotation that you're going through. I think on the tech side, what's really been working is having core positions and then having trading positions around those. That's something that we've been doing. The other thing that's working is just understand that the volatility is going to be massive. And I want to show you this. So here's NVDA, and this range between 115 to 129 has just been absolutely insane, and you can see how we're bonking our heads on this key level. And are we going to hold? Are we not going to hold? That remains the question. And the answer is nobody really knows. And now, of course, you are below, I believe you're below that 200-day moving average, and all these are starting to sweep down. So this looks disgusting. Like if it was any other name and I didn't have a bias, I'd have a problem. But obviously people know I have an issue. But in regards to how we are, you're closing below the 200 again. You have all these pointing down. So clearly you don't want to go long this, right? Well, yes and no. It depends on your time frame. And I'll show you what I mean by this. So the easiest thing for you to do to understand the average daily volatility of any name is just take the ATR, right? And all you want to do with the ATR is this. This is all you want to do is go and take a look at it and say, okay, I'm at 7.5. So that's telling you for that day that that's going to be your range. And this is really important. You just typed in ATR and it's telling you that there's roughly a 70% chance, it's actually 67, but we'll say 70, we'll round up, that you're going to be in that range. So then when you're trading that day on this name, then we're going to drop this down to just a complete bear chart, and you see these kinds of moves where you're like, oh, well, we're up at 120 and then we went to 127.80 and you realize that you just moved $7.80. When you look at the ATR, you're like, oh yeah, that's not a big deal. Or when you go from 127 all the way back down and you hold 120, you understand it's not a big deal. The same thing that you need to take away from this, okay, is the following. It tells you where your targets will be. I'm going to show you this in a second. And then I'm going to get into some names you need to watch this week. But when you're looking at this, you would understand that if you broke this level, like let's say you got down here and you broke this level, and people are like, well, how bad could it get? Your response would be, well, the ATR is 7.5. So hopefully you can see in these videos how I'm trying to include the macro and the micro and wrap it all up on Saturdays. That's what we've been doing. I always appreciate your comments on this. I think I'm going to keep doing that because people are asking to see the trades again, like the TradeZilla stuff, and they're also asking to keep the macro stuff going. And I think Saturday is a great combination for this stuff, but always your comments are how I create this. That's the whole purpose of me doing all this. So just keep them coming and we'll go from there. Now, in regards to how we see this playing out, I have my opinion, and it is just an opinion, but I will trade what actually happens. It's up to you to understand that the ATR is telling you the range in which something can move. And if you're putting your stops in those ways, dependent upon your time frame, you're just waiting to get run over. It's silly. You just must write a check to St. Jude. Let me just give you an example. Now, one of the things we're always looking for are pain points. And the easiest way to find a pain point is to just very simply look at where you have a recent high, the all-time high, or another high, and you can see how we act there. For example, this is a pain point from this area, and you can see how that's marked off from when everybody got in here, and then you have this huge reversal. Another one would be something as simplistic as trying to rally, get back over that high, and get rejected. So you're gonna get a ton of pain in here where people bought and they're like, oh, I'm just gonna hold it, it's fine. And now all of a sudden they come down. So these peaks and the valleys, whether you're short or long, are pain points. Now, why this is important is because when you're trading, like last night, and you know where these levels are, they give you clear indications where people are going to run into a problem. Take a look at this on extended trading, and you can see these levels last night, how you were hitting and you just were rejecting. And as soon as you rejected these, you could tell that you had an issue. Now this morning, what you did was you opened directly into those. So while everybody's cheering and looking at this, trying to break out of that pre-market or post-market high, we're already aware of these levels and we're already trying to figure out where we're going to get involved. And then they just made life super easy, if you can tell by looking at this. What they did was they just gave you a doji. And then as soon as they gave you a doji, they broke it, and then you have the other bar down. And from there, you never really had to do anything with it. You just had to continually money manage the position. And you got all the way back down, and I think that that's really important. You got all the way back down. I think it was like 380 or 385 was the low on this. It was like right around here, 384 level, something like that. So we absolutely started on the short side on this. This never obviously recovered. And quite frankly, if he didn't come out and say robo-taxis, I don't think it would have bounced. But everybody and their sister's short, so this is what you're dealing with. And you got a real clear indication here on when you really should have bought as well if you're looking on the long side. I'm going to show you this live, and when you see it live, you'll see what I mean. It was very clear, the turn that happened right there, and some people in the room were actually waiting for that to go long. I didn't. I took the whole short all the way down, and I'm going to show it to you live, but I want you to understand how to do this so you can do it for yourself. But I also want to just show you the level of volatility you're dealing with in this market. So if you're not willing to deal with the kind of volatility where you're down 26 and then you're back up to where are we now at the time of recording this, up 21, you probably want to change your position size because this is what we're going to be dealing with for a little bit here, guys. Let's take a look at this live. Tesla, they're already trading up into our levels and the levels that we talked about. I'm going to watch it off the open. I want to see how this acts before I do anything. I'm more interested in shorting Tesla. I just don't have anything that's telling me to do it yet. Tesla's starting to crack a little bit. I could use that doji as a sign and try it and see if I can catch it early. Just use that high. I'm really very interested in this because this could get ugly. I'm going to short Tesla with a high day stop. And I sized accordingly. Tesla's working for me now. I'm up $3 in that short. What we're going to do there is just pull something out of it. Tesla, I'm just staying short. Nothing for me to do with it. Just sit back, watch and wait. See if I get one of those kind of gap fill kind of days. So I'm giving it a lot of room. If it takes that high a day, at this point, I can't lose money on it. If you're doing this for just the day trade, you're scaling out of it as this happens. It's not going to be straight down, guys. We know that. Up 10, trimmed. So they made my life easy. What I want to do is start seeing if am I going to close over that or not. And if I do, then I'm probably going to get out of the trade. Until that happens, I don't have to do a darn thing. There's nothing for me to do except just hashtag win. Trimmed. Up 18. All right, we got our gap fill. I don't know that you're going to break that. Let's see what happens. Nice trade, right? All they're doing again is just giving me new levels to drop the trailing stop to. So now the trailing stop would be here, right? If I get over that with the rest, then I close it. Now we're up about 20 bucks on that short. Right into yesterday's low there. I think we're up like $23. I'm going to trim. Here's Tesla on the 9 EMA. Oh, broke the 9 EMA, can't close over the 9 EMA, broke the 9 EMA, can't close over the 9 EMA. See how it's starting to turn here? See how it's getting over that 9 EMA? It's telling me that the easy money's probably made on this. We're going to close more of that while we're looking at it. Out of the rest at 90. So made $17 on the rest. Now, I hope you found that helpful. When we discuss these pain points and the trading of them, a lot of people overlook the significance of those. And I just want to explain this. And then I want to go through a couple of names very quickly here, and we'll bring this thing home. So when we look at something like a Tesla, and you watch that trade out live, and then you put the peak value on that VWAP here, and then you see where you rejected, right, this day, okay? And then you see this kind of thing, and you're like, well, does that really matter? To an extent, yeah, it does. It does really matter. It matters where people are in, and you're going to get rid of the pre and the post. Because if you watch those areas and then you see how you respond to those areas, it tells you a lot. So the peak VWAP, your hit, rejection. And this is I actually did a trade here where we broke out, rallied on it because we retested it. So I actually bought it for a trade on that going, okay, we're going to go. We did the retest. And then of course we got, trumped where, no, we're really going to super duper do the tariffs. And then when you watch this level, I want you to really watch this because this is the significance of what I'm showing you. See the doji here, doji, breakdown, boom. That's it. You know that you've now rejected this area. Okay. So this is something that you can do all the time. It doesn't have to be Tesla. But these levels, these are not levels that most people are looking at. You need to find the pain points. And once you've identified them, you can do really well. Like watch Apple here, for example. If we go and take a look at Apple, and we had a short on this on Friday, did very well. I'll walk through that in another video. And I am going to do more educational videos because I got asked to. But if I do the pain point from that area, I think that this is fascinating and it works both ways. Look at where you closed. So when you drop this down and you look at that day and you're like, oh, we tried to test there. Oh, well, we hit that area. Everyone's trying to figure out, well, why are we battling this in here over and over? Like, why is this the cat's pajamas, this area? Test, retest, and go. If you knew this was there, you would care and go, I'm going to try that bar. You might have even tried one of these earlier bars, and then you can see the push, right? Same thing here, up, over, 1, 2, 3, and then you go. Once you identify these areas, you can see the significance, test, retest, breaks, and then you close over it. That's what you want to focus on. Now, my thought on a couple of these names that I think it's really important for us to go over are the following. How is Apple going to be affected by everything that's going on? And my sense of it is that they're going to have some kind of problem, even more of a problem than the subsidies that were just placed on China from technology. I don't know that you're going to hold here, but you're holding that level right now. What I would do is the simplest of things with something like an Apple. And I would say, okay, we have broken that 55, the 22, and the 12s down here. Are we going to come back down to like that 233, 232 level? And if we break that, where are we going to go? Usually what we see is a follow-through day. I'm not so sure what we're going to see here with these names. And I don't think, quite frankly, anybody is. But I would watch this very closely. If you look at the weekly chart, that's what your weekly chart looks like on Apple. It's not awful, guys. Yeah, people think it might look awful, but this is the first higher high that you've had. So you're getting some stability. You have that doji and you flipped it. You've gap filled, and we'll see how this plays out. Go and take a look at this on a monthly. And this is what I love right now. You get those monthly charts. Is that something I really need to be worried about? You're holding the 220, so if you're looking from a monthly standpoint, probably not. And what I like to do with these bars as well is you just go here and you measure them and you see where are we on the 50% line. And you'll see that you closed right on it. So I think that's significant as well. And it's definitely something that I'd be paying attention to. If we take a look again at some of the larger names out there on the weekly, you're still not able to close above that. But that doesn't mean that you can't close above it. And I think that you have another test of 420 coming sooner than most people think. That's my opinion on this. I think that when you saw on Friday, always, give you one more thing to take from these videos, guys. Always watch the last hour of trading. Always on your names. Okay. And then you'll just see it right here where you can see that you held from the last hour. Who buys in the last hour? Institutions. Whether up or down doesn't matter, but it's a data point that you have to take into account when you're trading. So when you go and look at something like a NVDA and you're going, well, from that level on, 345, you still had institutional selling. Yeah, you did. You did have institutional selling. How about AVGO? Did that have institutional selling? No. Okay, so maybe we're seeing a changing of the guard here. Matter of fact, really what you saw when you looked at it was just, you're riding the lightning on the AVGO breakout from earnings. You really did not fall apart. When you go and look at names like Meta and you go look at the last hour, did you really fall apart? Yeah, for a little bit you did, and then you kind of caught at that 330 level, but you go and watch some of these supports that are sitting there, and you held those supports. So are these areas of interest that we should look at buying them? Do we want to see if they're going to hold? Yeah, you want to watch some of these levels that I'm putting out for you right now and see how you do. The most important thing about this right now is not to overthink it and to understand that you're in a news-driven event and it's just going to continue. It's not going to get less news movement. And this ties us back into what we always talk about. We're constantly talking about the stool, right? And the macro, the fundamental, and the technical. And if you really think about it from that perspective, like who's really going to get hurt by tariffs? Like what companies? It would really be the apparels, because they're the ones that are manufacturing goods in other places that really can't do it in the US. And we could say that, is this because of fentanyl? Is this because he wants to make Canada a state? Does he really want Greenland? Like, who cares? That's just the other noise we talked about earlier that they're trying to get us to focus on. What we need to focus on is who's affected and how do we make money off of it? So we would understand that if names like Ralph Lauren dropped or Lulu dropped, because all of a sudden that good that you're manufacturing somewhere else can't come into this country, and you can't get the same gross margins off of it into this country, meaning the US. So I hope that's helpful. That's it.